In today's video we will discuss 12 points on Dividend ETF and what it is. Before we get started, please subscribe, like, share and click the notification bell to help the channel. Dividend ETFs, or exchange-traded funds focused on dividend-paying stocks, represent a sophisticated and strategic class of investment instruments in the financial markets. These funds amalgamate stocks from various companies known for issuing dividends, a portion of earnings distributed to shareholders. The detailed exploration of dividend ETFs encompasses various facets, each of which merits a comprehensive understanding for both seasoned and aspiring investors. 1. Conceptual framework of dividend ETFs. Dividend fundamentals. Dividends are payments made by corporations to their shareholders, typically from profits or accumulated reserves. These payments are often made on a regular, scheduled basis and can vary in amount. ETF basics. An ETF is a type of investment fund that tracks an index, sector, commodity, or other assets, but which can be purchased or sold on a stock exchange the same as a regular stock. 2. Composition and diversity in holdings. Stock selection. Dividend ETFs are composed of a diversified portfolio of dividend-paying stocks. These are selected based on criteria like dividend yield, consistency in dividend payments, and potential for capital appreciation. Sector allocation. The ETF might focus on specific sectors known for robust dividend payouts, such as utilities, consumer goods, and real estate. 3. Investment objective and income generation. Income focus. The primary aim of dividend ETFs is to generate income through regular dividend payments. They are particularly appealing to income-seeking investors, such as retirees seeking a steady income stream. Growth potential. In addition to income, some dividend ETFs offer the potential for capital appreciation, although this is typically a secondary objective. 4. Diversification benefits. Risk mitigation. By holding a variety of stocks, dividend ETFs spread risk more effectively than individual stock investments. This diversification can protect against company-specific or sector-specific downturns. 5. Types and variations of dividend ETFs. High dividend yield ETFs. These focus on stocks with higher than average dividend yields. Dividend growth ETFs. These include companies with a history of increasing their dividend payouts. 6. Tax considerations. Efficiency. ETFs are often more tax efficient than mutual funds due to their structure, potentially offering benefits in terms of lower capital gains taxes. 7. Market liquidity. Trading flexibility. ETFs are traded like stocks, providing liquidity and the ability to execute trades throughout the market day at current market prices. 8. Cost effectiveness. Expense ratios. Dividend ETFs typically have lower expense ratios compared to actively managed funds, though investors should still consider management fees and other associated costs. 9. Market risks and considerations. Volatility and market exposure. While dividend stocks are usually less volatile than non-dividend stocks, they are still exposed to market fluctuations and economic changes. Factors such as interest rate changes, economic recessions, and sector-specific issues can impact dividend payouts and ETF performance. 10. Strategic role in investment portfolios. Asset allocation. For investors looking to balance income generation with moderate growth, dividend ETFs can play a crucial role. They often fit well into a diversified portfolio, offering a balance between risk and return. 11. Performance tracking and benchmarking. Index tracking. Many dividend ETFs aim to track the performance of a specific dividend index. This involves replicating the index's composition to mirror its performance. 12. Investor profile suitability. Suitability for different investor types. Dividend ETFs are particularly suited for investors seeking regular income, such as retirees. However, they also appeal to those looking to reinvest dividends to compound growth. In conclusion, dividend ETFs offer a multifaceted investment opportunity, combining the prospects of regular income with the benefits of diversification, tax efficiency, and liquidity. They are a compelling option for a wide range of investors, from those seeking steady income to those looking to balance their portfolio with a mix of income and growth assets. Like all investment decisions, the choice to invest in dividend ETFs should be made in the context of an individual's overall financial goals, investment horizon, and risk tolerance. Thanks for watching and please subscribe, like, share and click the notification bell to help the channel.